Hello, everybody. So this week I want to talk about potential employee benefits that you could take as a single member LLC when you're taxed as an S corporation, and you're also an employee of your own corporation. Now, there is some disclaimers, caveats I'll throw in for this. Employee benefits you cannot discriminate on except for health insurance. That's the only one. So if you do have full-time employees who have been with you for typically 3 months is what we and the term is fully vested. That means that if you set up an employee benefit for yourself, you're required to provide that for your full-time equivalent employees as well. You are not allowed to discriminate. So if you do have full-time employees and you want to be able to take some of these as tax deductions, then you need to talk to your CPA or your tax advisor about possible restructures of your organization to be able to carve this out and still be able to deduct it without supplying them completely for all of your employees as well. Now, the idea of these is to be able to reclassify personal expenses that you're already spending money on as business expenses to make them tax deductible. Now, employee benefits is a very common, it's considered ordinary and necessary, which would be the tax terms, but they are very common expenses to see in large corporations. Well, if you are a corporation and you have one employee, meaning yourself, you are entitled to the same rules that large corporations follow. Employee benefits are considered an ordinary and necessary expense because it is a way to attract talented help. So you need to attract yourself to be a good employee of your company and have these employee benefits. Um, so I've already Googled. I went to Google and I pulled Google's employee benefit package and I pulled Facebook's employee benefit package as examples. And we'll just kind of scroll through the list and talk about a few of these things for examples. All right, so let's go ahead and share screen and talk about this. All right, so start with Google's first. So first thing is health insurance. Like I said before, health insurance, 100% business deduction, and that one you can discriminate on. Just Obamacare made that possible. So you can, if and when I mean discriminate, executives versus regular employees. So your C-suite type people. If you're the CEO, then that would be you. So then basically health and wellness is always a big category. So that's your health insurance and anything with health and fitness related. And that's kind of what we're covering here. We've got gym memberships, fitness classes, massage services are often available. Um, Reimbursements for health and fitness programs. So typically, what I tell clients is you can have a 100% medical reimbursement plan, meaning you have health insurance and your monthly premiums are deductible as a business expense. But then you can also have a 100% medical reimbursement plan. So anything that you have to pay out of pocket that insurance doesn't cover is also a business expense. So that could be your copay, your deductible, and things that insurance doesn't even consider. And you can take that on to mean like a holistic type health care. Um, Anything that you want to go in that direction. Anything under the umbrella of health and fitness, vitamins, minerals, health supplements, medications, anything like that. Fitness can go as far as to mean fitness equipment, anything fitness related. So, fitness programs, all sorts of stuff can be fall into that. So I worked at a hospital once when I was in college, and they were offering reimbursement if you signed up for the city 3-on-3 basketball tournament. So pretty much any outdoor recreational sport it can be considered fitness related. And so you could actually go so far as to say that, like, if you're into downhill skiing or mountain biking or backpacking or rock climbing or basketball or football or even so golf could even be considered that. It can get You can get extra aggressive, and so we do have to consider pigs get fat and hogs get slaughtered. And golf, I bring up specifically because it is used as an example of what is not deductible for entertainment in IRS regulations. So, but you could. if you wanted to get aggressive, you could still write it off as an employee benefit for fitness. Um, Retirement benefits. Now, my personal stance on this and what I pretty much advise all my clients is that regulatory retirement accounts like 401ks and IRAs are a tax scam that make you pay taxes until the day you die. The government is very good at collecting your money. And so they've come up with plans that they claim are great for you that just make you pay more taxes in the long run. So that's how I feel about these things. But you should have investment accounts, traditional stock portfolios, and stuff like that for retirement. So I do tell you to save for retirement, just don't use the government regulated plans. Time off. The hard thing about that is if you take time off from your own business and you're the only employee, you're not going to be making any money. So that's up to you. But yeah, you can say you have a PTO plan or something, right? Perks and flexibility. So this is kind of where we start to see things. We got free on-site meals, snacks, and drinks. So what I tell my clients is we'll write off 100% of your eating out. We're going to call it at convenience of the employer. And there's some other reasons behind that, but that's an example. On-site amenities, flexibility, transportation, discounts, other perks. So just a bunch of different ideas of what you could set up as your employee benefit package that you that count even if you are the only employee of your company. So then here is Facebook. So I throw them on there again. Health and wellness. So we've got health insurance, wellness centers, uh, mental health benefits. So yeah, I've had clients ask me, what about massages, chiropractic services, social and mental health services. Yes, all of those 100% should be covered by your business. Um, then we also have things like I've had clients ask me, what about a pool or a sauna or an in home gym? Yeah, so if you have a doctor that can write you a prescription for a sauna or a swimming pool, those would count. Or you could also claim a swimming pool for fitness. In-home gym, on-site gym right here. So that's 100% business for employee benefits. And we got time off and family leave again. So we've kind of already talked about that. Financial benefits, again, not really something I fully recommend, but then we've got some on-site convenience and perks again. So all meals 100% covered. So we can do that and make the same claim. Services, on-site barber, bike repair shop, dry cleaning, a mother's room. So child, typical, very typical employee benefits is child care services. So if you are doing anything that's child care related, that can be ran through your business. That could be a nanny, that could be extracurricular activities, that could be daycare or tuition assistance for elementary schools, all sorts of stuff right there that you could take. So these are just some examples of what could be employee benefits. Great places to look for aggressive employee benefit packages. Just go to ChatGPT and see what are some of the top 500 companies doing in America for aggressive employee benefit package to attract good talent. So if another company has already set the precedence, doesn't matter if you're a single member LLC corporation or if you are a multi-billion-dollar corporation, same rules apply, and you're allowed to take these as expenses. Now, some of these things, last thing I will say about this is some of these things might be considered overly aggressive by a particular IRS agent if they are auditing you. We can use lots of companies as examples to defend the stances that we take. And the other thing is sometimes it's just low-hanging fruit to keep an IRS agent happy so that we don't have to fight all the way to court in order to keep some of the more beneficial deductions and aggressive stances that we take. So just keep those things in mind, that it could be something that is ultimately given back to the IRS in the unlikely event of an audit, but there is a legitimate and business reason for taking those as expenses, so it is not tax evasion. Anyway, so hope this helps. I've had a lot of people ask about what could be employee benefits, so I hope this helps everybody as you try to decide what you can write off through your business. Have a wonderful weekend and see you next time.